I'm with Alan Friedman, co-founder and executive vice president of Atlantic Oil and Gas. Alan, your company is a pure-play Namibian explorer, currently targeting something, I think, 18 billion barrels of oil offshore Namibia. The news out of Namibia in the last 18 months has been uncommercial discoveries, a couple of dry wells by a couple of the operators. What have you learned from those wells?
Jake, thanks for having me on. We've learned a lot from those wells. I think Namibia being a nascent environment, this is the first real active exploration work that's been done, and a lot of information has been gleaned off of those wells. And I think that the definition of unsuccessful is not necessarily that, in so much as a lot has been established. And, as you say, there's about 3 or 4 wells that have been drilled. Most recently, HRT drilled 2 wells, the Marumbi and Wingat targets, which is right close to our blocks, and in fact established source rock, very good quality source rock in the oil generation window. And our blocks are in the same Walvis Basin, and in fact we have 3 blocks that are all resident within the Walvis Basin, which is the oil kitchen offshore Namibia. So with that information that the other majors have spent learning, that information now benefits us as we seek to attract majors to farm into our blocks. So to some extent the geology has been de-risked. We know now there is a working petroleum system, and our blocks are in the right location.
So there's about probably a dozen operators now offshore Namibia. What is the competitive advantage that Atlantic has? What is it that you know that they don't know, perhaps?
Well, what we do know now is what they've learned in the process. So they've spent money off of their balance sheet drilling their blocks. These are very expensive wells in the region of $70 to $100 million per well. With each of that drilling campaign, with each of their drilling campaigns and all that data that they've now obtained, we'll have the benefit of looking at, and we understand where the oil is not, and the reason why it's not there is maybe the traps and the seals weren't in place, the reservoirs were not of good quality, but we know that there is an oil kitchen, there is generation of oil. They recovered samples of high quality sweet crude oil, 38 to 42% API. And all of that was in the Walvis Basin. So I think really just we have the benefit of others doing work before us. We have 70% of each of our blocks, and really would give any major that's looking to farm in a good foothold in the most prospective area offshore Namibia.
So tell us what your drilling schedule looks like now. What are you doing next?
Well, the drilling schedule, we have certain milestones to achieve within the next 3 years or so. On 2 of our blocks, we only need to drill by the year 2016. We need to shoot 3D seismic before then. So the aim now is to shoot 3D seismic, and we are talking to a number of parties, early stage, that have interest in our blocks. And 3D seismic is definitely the next process in which we will undertake on the exploration cycle.
So in terms of the next catalysts to look out for from Atlantic, it would be possible JV, possible farm-in, or in the shooting of your seismic?
Yeah, I think there's external catalysts that are probably more important at this point. Repsol will be drilling right near our Cooper block, which will be in February of next year. That's just 2-3 months away. A lot of information that they've also picked up from the drilling campaigns of HRT and Chariot will be put to use. So they'll be drilling, and we should get some information from there. Also, after the uncommercial drilling results, there was another significant farm-in which was done a couple of months ago, and that was Tullow. Tullow farmed into Pan Continental's block, which is contiguous to a number of our blocks, right in the right location. They also expect to drill during 2014, and Chariot will also be drilling their central blocks in 2014. So those are all the external catalysts. As far as we are concerned, we expect that there will be some type of farm-out activity or farm-in activity by a major, which will help us on our exploration and help carry us from a financial perspective as well. So, you know, that's something to look forward to over the next few months.
Now let's talk about funding and finance for a little bit. I mean, in terms of exploration, this is as risky as it gets, correct? I mean, You're looking, it's a high risk, high payoff kind of a gamble, essentially. What kind of investors, in a year where a lot of companies, solid companies even with production and reserves, have found it hard to attract investors, what kind of investor is going to be a right fit for Atlantic?
So Eco Atlantic is fortunate that we have very experienced and well-heeled financially in terms of shareholders. We've had a number of financings which our shareholders always participate. They believe in the project. A lot of them are on our board and or part of management, so we have internal sources of funding. Yes, the markets have been really challenging over the last year, 2 years. We've still managed to raise money. We have about $5 million in the bank, which is more than enough to carry the G&A and to carry us for a couple of years in terms of G&A spend, and also for a limited amount of technical work. We're doing 2D seismic on the Cooper license. In terms of attracting money from the markets, yeah, we're in a cyclical environment. At the moment, it's been pretty challenging. We expect that to turn at some stage. We will attract additional finance. But as I said earlier, is that to a large extent, you expect the majors to farm in. And generally how that's done, as of the last Tullow deal, is they farm into a block and carry the junior for a large part of its spend on the 3D seismic and on the drilling.
Alan, what have you learned in 2013, looking back on this year, that is a lesson you'll take forward into your 2014 business planning?
So I think what we've learned is that the markets may stay soft for a bit longer. We've got to ensure that we maintain our cash balances. We are constantly assessing all the information that the other companies that have been drilling have provided. Some of it's public, some of it's not, but it always creates an environment where we can learn more. We are obviously looking at majors that will be looking to farm into the region, and Namibia is definitely an attractive place to do business. So from where we stand, it's much of the same. We will slowly but surely add value technically and make sure that our licenses stay intact, that we're fulfilling our milestones that the government has provided. We've got an extension on 2 of our 3 blocks, and that's given us some more time to execute. So we just carry on, and as months go by and other companies fulfill their drilling campaigns, we learn more and more about our blocks, and it gives other people confidence that there is oil. As I mentioned, there's a oil window generation on the Walvis Basin, and that's exactly where we are. So
if I'm a potential investor in your company, what briefly in a nutshell is the value proposition for me?
Okay, so our company is trading probably at a 52-week low for sure. So it's deep discounted in terms of value, although we have cash, although we have enough time to execute our milestones. So in terms of a value compared to our peers, we are in a pretty good position. We have a management team that has executed previously in Africa in resources many times over and sold some companies that we've developed. So management is very important to be able to navigate the company through some trying times. So I think that there are many different reasons why you'd be an investor of Eco Atlantic. Of course, we need a little bit of luck to find oil, but even without doing that in the very near term, there are a lot of catalysts that could provide a substantial return on investment.
Alan, thanks a lot.
Great, thank you.